Hi everyone, it's me, Eric, from the Taiwan Institute of Economic Research. Hope you guys have been watching the other Termship Bootcamp videos and are still holding up at this point. As a founder asking to investors about fundraising, most of you have definitely heard the term cap table a lot. So before we dig deeper into financial planning, let's talk about cap tables or capitalization tables. It's essential for founders to have a clean and presentable cap table, not just for the investors, but also for yourself to be aware of the financial situation of your company. Again, you can always hire a professional accountant to help you prepare your company's financials, but it's always good practice if you are able to understand it yourself. So what is a cap table? It is a table providing an analysis of a company's percentage of ownership, equity dilution, and value of equity in each round of investment by founders, investors, and other owners. Basically, it is where you can understand how the ownership of your company looks like. A clear cap table will help you adjust your strategy decisions instantly, especially under the fast pace of the startup world. You're likely to be constantly making decisions that impact your cap table and are colored by your capitalization. For example, if you are considering new financing, you need to be able to quickly run through several scenarios based on various calculations, such as different pre-money valuation, varying round sizes, multiple available option pool targets, etc. Or if you are recruiting a new COO and the candidate asks for options covering a certain percentage of your company, you need to be able to quickly determine whether you have sufficient shares available in your option pool, determine how dilutive the new grant will be to other holders, and calculate the exact number of shares that represents the requested percentage. An accurate and well-organized cap table will empower you to make good decisions quickly. Let's take a look at a simple cap table first. This is how a good cap table looks like. As you can clearly see what kind of shares your company has issued, how many investors are involved in your company, how much equity each of them owns, and which round they have participated in. For an early stage startup, you shouldn't have a complicated cap table. But do remember that there's no standard format for a startup to create their own cap table. However, there is some essential information that should always be included. Next, let's talk about how you form a cap table and what you should be aware of. It's quite normal to use spreadsheets to create a cap table. The most common structure, as you have seen previously, is to list the name of investors or shareholders on the y-axis, while the type of shares is listed on the x-axis. Aside from that, additional information can be also found on the spreadsheet. The first row should indicate the total number of shares of the company. The subsequent rows should list the following stuffs. Authorized shares, which is the number of shares the company is allowed to issue. Outstanding shares, the number of shares held by all shareholders in the company. Unissued shares, number of shares that have not been issued. And shares reserved for a stock option plan, which is unissued shares reserved for future hires. And you also need a separate table to cover the following information. Name of shareholders, of course, who have bought shares in the company. Shares owned by each shareholder, the number of shares held by each shareholder, and stock options which are owned by each shareholder, and fully diluted shares, the total number of outstanding shares, which helps a shareholder determine the value of their shares. Options remaining, number of remaining shares available to be optioned. Last but not least, the company's founders should be listed first in the table, followed by executives and other employees who own equity, and then investors such as angel investors and venture capitalists. Let's try to run one. Here's an example for a startup. As you can see, there are 3 founders with 30% of ownership equally divided and an ESOP pool for future employees. What happens if they raise $600K with a $3 million pre-money valuation? First, we will need a different table that lists the raising round, pre-money valuation, new equity raised, and post-money valuation on the x-axis, and total value per share and amount of shares on the y-axis. Now it should be easy. We filled in the information we currently know. From the previous table, we know the company has issued 1 million shares, hence each share has been defined as $3 with a $3 million valuation. With that, we'll issue $3 per share for the seed investors. In turn, they'll get 200,000 shares. Now, going back to the previous table, we'll add on a column for the seed investors and calculate the ownership percentage. This is pretty much it. The cap table can be as simple as this. So remember, never make it too complicated. Hopefully, this lesson have helped you understand more about the topic. This brings an end to the lesson of cap table. You should know what items to include and how to calculate the holdings. The next lesson in this series will be on the income statement. See you soon.